So many people ask their accountant, why do I have $50,000 profit, but yet $50,000 is not in my account? And that's just a hypothetical number that I threw out there. But we get these, us as accountants get these questions all the time. We're always asked, why does my income statement say that my profit was a certain number, but then when I look at my bank account, it doesn't match up? And I'm about to break that down right now. But before I begin, for those who don't know me, my name is Ephraim. I'm a CPA based out in Houston, Texas. Me and my team work with close to 100 clients on a monthly basis, close to 100 business owners on a monthly basis. And we do everything for them, finance related. So anything in regards to accounting, payroll, any kind of financial consulting for the business, budgeting, forecasting, all those things. We help our clients with all these things, because our job is to make sure that their finances are in order and that they can sleep well at night. So this is one very important topic that keeps getting emailed to me, keeps getting asked to me on Instagram, Facebook. So I wanted to break that down. So what I did was I created a fictional company called XYZ Incorporated, right? And it's a consulting company. And as you can see, the revenue for 2013 for this company was pretty decent, right? They made $783,000 roughly from 4 different cities. So when we look at their expenses, we see they had advertising, they had automobile expenses, bank service charges. Looks like their largest expense category was wages and salaries paid to their employees. And then their next biggest category of expenses was office expenses. And then you have travel, you have rent, right? So with all that being said, all their expenses added up to $559,000. So when you do the math, the difference between the 783 and the 559 is $224,000. That's not bad, right? So logically, most business owners would say, okay, thank you for this income statement. Why do I not have $224,000 in my bank account right now? And on top of that, why do I have to pay taxes based upon that $224,000? I have nothing in my account. Well, what normally happens in this type of situation, right? Your net income of $224,000 gets transferred over to your balance sheet. So your balance sheet is your assets minus your liabilities and equity, right? And if you don't know what an income statement and balance sheet is, I would advise you as a business owner to do some Googling, do some research, or even reach out to me and I can break that down further for you. But for XYZ's balance sheet, as you can see, their cash at the end of the year was only $19,000, but they had a net income of $224,000. So we go down to the liabilities and equity section and we see that they had an owner's draw of $205,000. So for those who don't know what an owner's draw is, an owner's draw is money that is taken out of the business for personal use, right? So a lot of times, a lot of business owners, what they do is they don't put themselves on payroll. They just transfer money out of the account, or they just take their debit card for their business and they go buy whatever they feel like it, right? And that's wrong on so many levels. And we can, definitely go into discussion of that further in probably a different video. But for this video's purpose, we're going to touch on the owner's draw category. So as you can see, the owner's draw was $205,000. The $224,000 is this year's current earnings, which was from the income statement. They had a retained earnings of $576,000, and their total liabilities and equity matches up to their assets. So when we go to their owner's draw account, we see different transactions for the year. We see rent, we see Prada, we see Louis Vuitton, we see transfers. The owner of this fictional company is named Kaylee Jackson. So we see transfers to her. We see she went to the eyelash studio. She went to Gucci. She went to Saks Fifth Ave. She's paying rent consistently every month. She went to Nike, Neiman Marcus. She went to the nail bar. She went to the spa. She bought some Yeezys. She went to Nordstrom. Hairstylist. She paid her pet's insurance. Vera Wang, Adidas. Fashion Nova, PetSmart, Tory Burch. I mean, the list just goes on and on. So this is where her money is going for the whole year, as you can see. And when you get down to the bottom, you see this 205,000 matches up to what's on the balance sheet. So what she's not even realizing is that all of this, you can't deduct this. This is not a business expense. This is all personal transactions. If Kaylee was to be audited tomorrow and she put all these as business expenses, and I've been in a few audits with clients. I've had clients hire me and I represent them in audits. What the IRS agent will do is they will say, okay, you had $79,000 in office expenses. I want you to break this down. Tell me where this came from. And now you have to show them where that $79,000 came from. And you see a lot of business owners, what they'll try to do is they'll try to put these personal transactions into business expenses. And what happens is the IRS, they'll look at that and they'll be like, okay, you spent $3,482 at Louis Vuitton. How is that a business expense? And I know a lot of you are saying, wait a minute, well, the transfer to Kaylee, that's a business expense. You can make that argument. Yes, you could say that is a business expense, right? So you could say she wrote that off as contract labor. So that means that Kaylee would now have to issue herself a 1099 at the end of the year. So she would literally still have to pay taxes on it, however much money she transferred herself, or even she could even 1099 herself for this whole amount of $205,000. And, she could now pay taxes on that. But the issue with that is, what business expenses do you have to write off on that $205,000 when all your business expenses that you've incurred for your business has already been included on your income statement right here? So now you literally have to pay taxes on $205,000 of money as a 1099 contractor. And on top of that, when you're doing that, the tax rate tends to be even higher. It tends to be anywhere from 33 to 40%. So there's ways to fix this, right? The number one way to fix this is to put yourself on payroll. Imagine if Kaylee paid herself, let's say, a modest salary of $50,000, $75,000. And I say modest because her business makes enough money to pay herself that. So if she did that, $50,000, she would subtract that from the $224,000, and that would equal $174,000. So instead of paying taxes on the $224,000, she would pay the taxes on the $174,000. And now, if she structured herself as, let's say, an S corp, she could literally pay taxes based upon the amount of money that she paid herself, which is the $50,000. So whatever tax bracket that is, and I think under Trump it might be, let's say, 20 to 25%. That $174,000 would be taxed at that tax rate. So it's all about how you structure everything and how you set everything up. It's all about getting with a professional, getting with someone that can help you strategize, that can help you put yourself in a better position to not have to pay as much taxes, and also to not have to make your business look like this. I mean, who wants this in their business? You don't want to commingle your personal transactions with your business transactions because, first of all, it's not good for audits. And secondly, if you were to ever be sued, that right there is an easy win for whoever's suing you because you're personal and business. So now if you try to say, hey, all the personal assets that I own this house, I own all these cars, you shouldn't be able to touch this in this lawsuit. The lawyer's they're going to look at you like, what are you talking about? All your personal and your business is together. So technically, whatever you have personal, have access to that. Give me that. I want that. So you want to get into the practice and the good habit of separating your personal and business. This is all I got for today, but if you have any questions, feel free to reach out to me. Send me an email at info@efsgllc.com, or you can, you know, hit me up on Instagram at Ephraim CPA. You can send me a DM. You know, feel free to reach out. You know, further. Hope you guys enjoyed this video. Talk to you guys soon.